Hey, welcome back. Let's dive straight into today's news, folks. Over the past month, the prolonged conflict in the Middle East has really taken a toll on the Korean market. And when I say toll, I mean the Kospi index plummeted by 19% in March alone. That is a drop of roughly 1,200 points. To put that into perspective, the total market cap for the Kospi and Kosdaq combined saw over 1,060 trillion one virtually disappear in a single month. Foreign investors led the heavy sell-off, dumping nearly 35.8 trillion won worth of shares, which actually marks a record high for a single month. Because of this severe market contraction, local securities firms are quickly pulling back on their optimistic forecasts. The number of analyst reports upgrading target prices has plummeted by 63% compared to the previous month. We only saw 386 upgrade reports recently, and the ones we did see were mostly clustered around big, relatively stable names like Samsung Electromechanics and Samsung Electronics. Now, what's truly alarming for investors right now is the total collapse of traditional safe havens. Usually, when the stock market tumbles, you look for cover. But right now, gold, bonds, and the Korean won are all falling at the exact same time. If we look at the bond market, long-term bonds took a massive hit. For instance, the Rise 30-year Treasury Bond Leverage ETF plummeted by 13.48% over the last month. Even gold, which almost everybody considers the ultimate safe bet, lost its shine. Domestic gold prices dropped nearly 6%, falling from 239,301 per gram down to 224,971. Analysts across the board are calling this a highly unusual market with absolutely no safe haven to hide in. So, how are retail investors, who are affectionately called ants here in Korea, navigating this storm? Well, they are making some incredibly bold and contrarian moves. Let's look at their strategy in Japan first. Korean retail investors are actively accelerating their exit from the Japanese market. In March, they net sold over $99 million in Japanese equities. That's more than double the outflow we saw in February. But they aren't just taking their money and leaving, they are actively betting against Japan. Their top ETF purchase recently was the Nikkei 225 Double Inverse ETF, with net purchases reaching $7.36 million. Essentially, they are doubling down on the belief that the Japanese market is going to experience a significant decline. But their strategy at home? It is the exact opposite. Despite the massive 19% drop in the Kospi, Korean retail investors are scaling back their reverse bets on the domestic market. Over a recent one-week period, they sold off over 116 billion won worth of domestic inverse ETFs. Instead, they bought up more than 300 billion won worth of Codex 200 and leverage ETFs. Not to mention, individual investors bought a staggering, record-breaking 33.5 trillion won in the domestic market this month. Simply put, they are heavily betting on a Korean market rebound while aggressively shorting Japan. Finally, let's shift gears to the retail sector, where there's a critical development regarding the supermarket chain, Home Plus. Home Plus is currently under immense pressure to finalize its corporate restructuring, but there is a sudden glimmer of hope on the horizon. The preliminary bidding for the sale of its supermarket division, Home Plus Express, has successfully attracted multiple candidates who have officially submitted letters of intent. This is a very real race against the clock. The court-mandated deadline to approve the corporate rehabilitation plan is May 4th, which is just around the corner. Earlier this year, HomePlus narrowly avoided a wage crisis thanks to a 100 billion won emergency injection from its major shareholder, MBK Partners. But they still need to secure up to 300 billion won for their operating funds, which makes this sale absolutely vital for their survival. While major industry players like Lada and GS opted out of the bidding process, the market is closely watching to see if HomePlus can quickly vet these new candidates and select a preferred bidder before that May deadline expires. That's all for today's deep dive. We'll be back with more insights. You've been listening to the Korea Economy Brief, straight from the front page of Seoul Economic Daily. Thanks for tuning in.